You did everything right. You studied, you waited, you followed your plan. You saw the setup, you entered the trade, and for a moment, it worked. Price moved exactly how you predicted, and you felt it. That quiet moment where you think, finally, I'm getting this. Then it happens. A small move, a quick pullback. Nothing dramatic, nothing unusual. Just enough to hit your stop loss. And then, the market does something almost insulting. It turns around and moves exactly in your direction, without you. You sit there staring at the screen, confused, frustrated, maybe even a little angry, thinking, how is this even possible? It starts to feel personal, like the market is watching you, like it knows exactly where your stop is, like it's targeting you. But here's the truth. It's worse than that. The market isn't hunting you specifically. It's designed in a way that makes your behavior predictable. And that predictability is exactly what makes you lose. Because when you zoom out, something strange appears. The same thing keeps happening, not just to you, but to almost everyone. Traders enter good setups, get stopped out by a small move, and then watch price go exactly where they expected, over and over again. At first, it feels like bad luck. Then it feels like a pattern. And eventually, it starts to feel like the system is broken. But the system isn't broken. It's working exactly as it's supposed to. The problem is that most traders are playing the game at the surface level. They focus on entries, indicators, signals, but they ignore the deeper layer, behavior. The market is not just numbers moving on a screen. It's a reflection of how people think, react, and place their money. And once you understand that, everything starts to make a lot more sense. Most traders are taught the same things. Buy at support, sell at resistance. Place your stop just below or above. It sounds logical, structured, even disciplined. And that's exactly why it spreads. But when thousands of traders follow the same logic, they all end up doing the same thing. They enter at the same places, they exit at the same places, and most importantly, they place their stop losses in the same places. Now think about what that creates. It creates clusters of orders, huge pockets of liquidity sitting in predictable zones, and those zones become incredibly valuable, not to retail traders, but to institutions. Imagine you're not trading with a small account. Imagine you're managing millions, or even billions. You can't just enter the market whenever you want. If you try to buy a massive position instantly, you'll move the price against yourself. You need liquidity, people on the other side of your trade. And where is that liquidity? It's sitting in stop losses. Every stop loss is a future order waiting to be triggered. So instead of chasing price, institutions often wait. They let retail traders position themselves. They let them place their stops in predictable areas. And then, when the time is right, price moves into those areas, not randomly, but intentionally, to collect those orders. This is what's known as a liquidity sweep. Price moves into a zone where stops are clustered, triggers those orders, and then reverses. To a retail trader, it looks like manipulation, like a fake move, like the market is tricking them. But in reality, it's just the market doing what it has to do to function. It needs liquidity to move, and your stop loss provides that liquidity. So, when you get stopped out right before the real move, it's not because your analysis was wrong. It's because your exit was placed exactly where the market needed it to be. Now here's where things get even more dangerous. After this happens a few times, you start adapting, but in the wrong way. You start tightening your stops. You start moving to break even too early. You start exiting trades faster. You think you're being smarter, more cautious, more disciplined. But what you're really doing is making yourself even more predictable. You're moving your stops closer to the noise, closer to the areas that get hit the most. And as a result, you get stopped out even more often. This creates a cycle. Frustration leads to tighter control leads to worse results, and worse results lead to more frustration. This behavior is driven by something very simple: loss aversion. The pain of losing money feels stronger than the pleasure of making it. So naturally, you try to avoid that pain. You move your stop to break even so you can feel safe. You exit early so you don't have to watch a winning trade turn into a loss. You're not trying to make more money. You're trying to avoid feeling bad. And that shift from logic to emotion is where your edge starts to disappear. Because trading is not about individual trades. It's about the outcome of many trades over time. This is where expectancy comes in, what you make on average per trade. And expectancy depends on two things: how much you win and how often you win. When you move your stop to break even too early, you slightly reduce your losses, but you massively reduce your winners. You cut trades before they have time to develop, before they have time to reach those big 2R, 3R, or even 5R moves. So your system slowly shifts. Instead of having a few large wins that outweigh your losses, you end up with a lot of small outcomes that go nowhere. And that's the part most traders never see. They focus on the trades they lost, the trades that hit stop loss. But they ignore the trades that could have been winners if they had just let them run. Over time, those missed opportunities add up. Not just a little, massively. The difference between a profitable trader and a struggling one is often not better entries. It's better exits. It's the ability to stay in a trade long enough for the idea to fully play out. So the real question is not, how do I avoid losing? The real question is, where is my trade actually wrong? That's a completely different mindset, because now your stop loss is not based on fear. It's based on logic. If you're trading an uptrend, the trade is only wrong if the structure breaks. If price forms a lower low, then yes, the idea is invalidated. But if price is just pulling back normally, the trade is still valid, and your stop should reflect that. Markets don't move in straight lines. They move in waves. Push, pullback, continuation. Over and over again. If your stop is too tight, you're placing it inside those natural movements. You're essentially saying, if the market behaves normally, I want to be out. And that doesn't make sense. Your stop should be placed beyond the noise, beyond the normal fluctuations, at a point where something has actually changed. Now, this doesn't mean you ignore risk. It means you manage it differently. Instead of moving your entire position to break even, you can take partial profits. Close a portion of your trade when you reach a certain level. This locks in some gains and reduces your exposure, but it still allows the rest of the trade to run. This way, you're balancing psychology and probability. You're protecting yourself without cutting off your potential. Because the truth is, trading will never feel completely comfortable. There will always be uncertainty. There will always be moments where you question your decision. That's part of the process. The goal is not to eliminate that feeling. The goal is to operate correctly despite it. To follow your plan even when it feels uncomfortable. That's what separates consistent traders from everyone else. So next time you're in a trade and you feel that urge to move your stop to break even, pause. Don't act immediately. Ask yourself one simple question. Am I protecting my account or my emotions? Because those are not the same thing. And learning to tell the difference changes everything. You'll still lose trades. That never goes away. But your winners, they'll finally have space to grow. And over time, that's what makes the difference. If this changed the way you see the market, then you're already ahead of most traders. And if you want to keep improving, keep learning, and start thinking like the people who actually win in this game, subscribe. Because this is just the beginning.